All right, y'all, welcome back. I got a good one for y'all today. So, today I want to talk about this is going to be video number three on Robinhood's IPO access that they're allowing their users to do. But the stock that I want to talk about today that they got in their program is a new one here by the name of F45 Training Holdings Incorporated. Okay, weird name, but anyhow, this company pretty simple to understand. They're basically a studio gym company. They're they're a franchise company that's trying to build a bunch of different gyms. They're like they're trying to be like a Sonic or a McDonald's of the gym industry. That's kind of an ironic way to put it, but that's basically what they're doing. They're franchising gyms. And when I say gyms, I mean a specific type called a studio gym. Just it's a smaller type gym, not necessarily. They won't necessarily have like all of the bells and whistles. They'll be small, a little bit smaller size gyms. But anyhow, that's the basic premises of this company that Robinhood's got in their pipeline to IPO. And with the IPO or whatever, if you confirm your eligibility and you want to buy into it, you can go through that. You basically tell Robinhood, I would like this many shares, however, up to however many you can afford. And Robinhood basically they put you in the running for it, and then just on a random deal is whether you'll get some of the shares you wanted, all the shares you wanted, or none at all. But they're at least giving you the option to have a chance to get in right before it IPOs. But and the IPO price range that they've got listed for this company is anywhere from $15 to $17 a share. Now, I read their prospectus, and we're going to pull up the prospectus here in just a second. But in their prospectus, they anticipate the final price to be set at $16 a share. Now, last couple ones, I think they've been kind of close to about the middle, so we'll see. I kind of got a feeling it'll be around $16 a share. But anyhow, they're just a fitness company that's doing studio gyms. Now, one of the things that they based their kind of brand on was and they say it right here in the description, the company offers consumer functional 45-minute workouts. Basically, they fit their workout plans that they do in their gyms into a 45-minute time frame. They want to make it faster and I guess you would say like more intense instead of like spending a whole lot of time in the gym. You just go in for a shorter amount of time and really hustle is that's kind of their idea that they somewhat built their brand recognition around. But anyhow, with that being said, let's take a look at the prospectus. So here we have the S1 prospectus form that they filed with the Securities and Exchange Commission. Now, this F45 Trading holding, something that's really interesting here is just right off the bat. Well, let me get into that here in just a second. So, how many shares are they wanting to offer to the public? They state right here this initial public offering of common shares of stock, we're offering 18,750,000 shares of common stock. And then, see, that's what the company is offering. Now, there's another little part here about how many more are going to be offered, and this one threw me till I kind of read into it more. It says right after the 18,750,000 shares, the selling stockholder identified in this prospectus is offering 1,568,000 or 62,500 shares of common stock. So this other shareholder is wanting to sell off around 1.6 million shares. So that in and of its face is interesting. I'm like, hold on now, who's this second shareholder? But we'll get into that. Prior to this offering, there's been no public marketplace for the common stock. That's kind of a duh. I mean, that's why they're IPO, and IPO stands for initial public offering. So it's like, hello. But anyhow, we go down here, and then here are the big boy underwriters. You got Goldman Sachs, J.P. Morgan, and then some of the smaller ones. Grumman Securities. I've heard of some of these, but basically the big investment banks, or two of them in this case, and then you got some smaller guys. Team training, life changing. That's just kind of their brand slogan. They're trying to put lipstick on a pig for a minute. Okay, now this right here is a picture of Mark Wallberg. Now you're like, okay, well, Mark Wallberg goes to the gyms. Indeed, he does. Mark Wallberg also owns, I think, at least one franchise location of the F45. So he owns one of the businesses. Okay, you bought a franchise from him. Okay. But let's go back up here to this shareholder we talked about. Okay. The shareholder offering roughly 1.6 million shares. This shareholder is an investment company owned, not completely, but partially owned by Mr. Mark Wallberg. Now, this investment company that is selling the shares in the initial public offering is only roughly 24%, to my understanding, owned by Mark Wallberg. So he doesn't own a whole lot, but he owns close to 1/4 of the investment company that is selling shares as part of this IPO. To be fair, it's 1.5 million shares versus the company selling 18 million. So, but still, it's like, ding, 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 ding. Hey, watch out here. Okay, so here's the back to give you a little background. Mark Wallberg has financial interest in this. He is also on the board of directors. He is a as they specify, non-employee director of the company, if that makes sense. So he's definitely involved with this. Now, I'm saying this skeptical, but also you have to take into account Mark Wallberg. He not all the time. He's not, but he tends to, if he puts his name back behind something, he's doing it, from what I can tell, from what little I've researched. Again, like anything, dig into it. But he don't put his name behind something if he don't think it's going to do okay, because he he endorsed his restaurants with his brothers. I remember the TV show and all that about that. Well, those restaurants, the TV show itself died off, but those restaurants are still out there. The Walbergers restaurants, they're still out there. So my point in saying this is he's not just in this for the finesse. He's got financial interest in it, and he may think, I don't know, I ain't in his head, but he may think this company's going to do good. Don't know. But the point is, I wanted to tell y'all that this guy, Mark Wallberg, has financial interest in that. So keep that in the back of your mind. Like, okay, ding, 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 might be an issue. But let's go on. Okay, total franchises. So total franchises they have, roughly 2,800 franchises. They're located in 63 countries, with a total studios of 1,555 studios. Now, that was based on June 30th numbers. Not bad. But let's kind of get down into the brass tacks, get past all the fluster. They're showing you how much they've grown. Okay, well, if we know anything about the last year, the past year, gyms didn't do so hot, and we all know why. I can't say anything because YouTube doesn't like me to say anything. But the point is, we all know why gyms didn't do so hot. Now, since that problem is getting pushed on, like, and it's not that big of a deal no more, okay, everybody's fat and everybody's tired of being in the house, so more people are likely going to get out, start going back to gyms and stuff. Everything's going to start getting back to being similar to how it was before. So keep what I just said there in mind when we get down to the financials. And let's go ahead and peruse on down toward the financials. This is just their definitions and blah, blah, blah. Blah, blah, blah. They're showing their total growth right here. And then they specifically state right here impacts of the COVID-19 pandemic. So there's that. I just mentioned it. Y'all read into it. Take into that. I'm not going to say a whole lot because of YouTube. But then you have their sales. Okay, franchise model. This we're going to read into a little bit. We utilize an attractive franchise model that has allowed us to grow rapidly. Global network of 2,801 sold, which were studios. Okay. They're using the franchise model, from what I can understand, is basically the franchise model is less capital intensive. Capital intensive meaning they need to go to the bank, borrow money, issue loans, go put bonds on the bond market. It costs less money if they go the franchise route because then the expenses of buying the place, building it, all the stuff, most of those expenses, not always, because it depends on how the franchise is set up. But my point is, those expenses tend to be offloaded on the person buying the franchisee license. So that the fact that they're doing it the franchise way, they're trying to offload some of their capital intensive risk, and that risk is not so much on the books. So it's an interesting idea. I mean, clearly franchises have worked very well for a long time. So franchises does work. Okay, let's get down here. Principal stockholders. Our principal stockholders, this is the people that currently own shares in the company. Mr. Adam Gilchrist. I can't pronounce stuff. Our co-founder, president, and chief executive officer. Okay, makes sense. He's going to own quite a few of the shares because, I mean, he's the executive officer. He's one of the co-founders. Okay, this MWIG, they're going to own 28.6% of the post offering. This goes back to what I was talking earlier. A special purpose private equity fund, okay, led by FOD Capital, a family office investment fund, and Mark Wallberg, which acquired a minority interest investment in us in March 2019 through an acquisition of our convertible preferred stock. Basically, the MWG is owned by a private equity fund, and the private equity fund is owned partially in a minority position by Mark Wallberg. So be aware of that. And then entities affiliated with K1, a global investment, and L1 Capital, again, global investment funds. So basically, not quite seed investors, but kind of. So those are kind of who owns the shares, per se. And then they just go into their corporate structure and use of proceeds. Use of proceeds. We estimate that we will receive net proceeds of approximately $275.9 million from the initial public offering at $16 a share. We intend to use the net proceeds we receive from this offering to get rid of their debt, to pay for the purchase price of our acquisition of certain assets of the Flywheel Indoor Cycling Studio business. Okay. To pay cash bonuses to certain employees, including certain executive officers. Okay. And to pay expenses incurred in connection with this offering. That makes sense. You got to pay JP Morgan their share. Okay. And 5, for working capital and for general corporate purposes. Okay. What they mean by working capital is they need money to run the business. So that's what they mean by that. Dividend policy, they ain't going to pay a dividend. They may in the future. Risk, conflicts of interest. Read the conflicts of interest, and then they're going to be listing under the ticker symbol FXLV. Okay, kind of a weird ticker symbol, but it's what they got. Okay, money time, money talk time. Okay, revenues. Total revenues. In 2019, they had revenues of, now this number right here is in thousands. So just be aware of that. This is not numbers just like that. This is numbers in thousands. So 92,690 with thousands. Okay, 2020 they had a slight decrease from 2019. Okay, not bad. Then from 2020 to the end of 2020, they went from 82 to 24. So they had a significant decrease in their revenues. Why? All the gyms were closed. Every single one of them were closed. Okay? And then 2021, they're lower than they were at the end of 2020, but they're coming back. They're doing kind of like this. Now, this small decrease from 2019 to 2020, I have a slight idea about some of that. We had Peloton. You got stuff like Peloton, the home exercise thing. That's kind of starting to take off. So that is somewhat of a competitor that may have been eaten at this difference in these two numbers. But anyhow, let's get into the costs and operating expenses. All of the years, 2019, net loss of 12. Okay. 2020, start 2020, net loss of 25. 2020, net loss of 733,000. Okay. The reason why this net loss, in my theory, is so low right here compared to early 2020 is, quite frankly, when they shut down or whatever, all of the risk of the gyms being shut down isn't on the company, because the company is a franchise company. Okay? All of the risk on the being shut down, not being able to open up, was on the franchisees that bought the franchise licenses, in my opinion. I may be completely wrong about that. So that's why this loss number is probably lower. Now, I'm saying probably because I don't know. That's just a working theory I have. And then in 2021, their losses went way up. So, as you can see, the company has been losing money. They're losing money. Now, again, you have to take into fact all the gyms went closed. When the gyms open back up, they're probably not going to have this kind of losses. but they definitely did have them. So take that into account. And then they just go into breaking down all the different stuff. But like I said, if y'all are interested in this company, read through the prospectus, do a much more deep dive than I did. If you're even thinking about putting your money in something, you read all of the shit. So you don't just skim through it like what I'm showing y'all. I'm showing y'all the highlights. You need to look at the lowlights. You need to look at the meat and the potatoes and see where something might go sour. And then they talk about risk factors and everything else. But that's the basic overview of the F45 Training Holdings Company. They're just a gym franchise company is what they are, and Mark Wallberg is involved with them. He's on their board of directors. He is got financial interest through shares, and he owns one of their gyms. So, I mean, look into it, see kind of what y'all think, and y'all go from there. But anyhow, I was just wanting to kind of show y'all Robinhood had a new IPO up, so I thought I'd kind of read over it and give y'all a little bit of information about it. So I hope this helps y'all out. Do your own research, dig into it. I can't help y'all with that. And with that said, I'll see y'all next time. So have a good one.